Hey, this is René. Welcome back to another video on this channel. And today I will test the ICT silver bullet strategy in the US 500 index. So you can see it here in the background already. This is an automated trading strategy that I wrote. It's an expert advisor for the MetaTrader 5. And if you're interested how this program is designed and how you can use it for yourself, make sure to subscribe to this channel because I plan to upload a programming tutorial for this exact expert advisor in the future. So if you don't want to miss out this chance, make sure to subscribe. And yeah, so what we see here is the ICT silver bullet strategy is a strategy, and maybe I can show you the videos that are based this expert advisor on by the Inner Circle Trader. And you can watch this video here. And also I watched the ICT silver bullet strategy by the moving average. He gives some more rules that I was able to stick to for programming of this expert advisor. But mainly what we can see is that we will use 3 different time zones. And we have the 3 to 4 a.m. time. Then we have the 10 to 11 a.m. time. And last but not least, we have the 2 to 3 p.m. time for this silver bullet. It's always based on New York local time. That is why in the MetaTrader I'm using the US local time data also. So I use the data from the tick data suite and I made it so it is GMT -5, which is the New York local time. And it's -4 during daylight saving. So how does it look when we have a valid trading setup? And I have a trade here on the screen already. And you can see that the strategy, it will always find these time intervals, for example, from 10 to 11 or from 14 to 15 o'clock. Or as we can see in this current trade example, from 10 to 11. And you can see that whenever we enter one of these trading intervals, like 10 to 11, we will then search in the previous bars for the last fair value gap. And the fair value gap is, as we can see here, it always consists of 3 bars. So we have 1 bar before the bar with the fair value gap, and then another bar following. And the fair value gap is if the high of this bar and the low of this bar, if there is no, if there is a gap between these. And if we find such a gap, we will then search for entry opportunities in this trading hour. So for example, here we would, since the price was above the fair value gap at this moment, we will wait for the price to come back to this fair value gap, and then we will enter a buy position immediately. The stop loss is at the last swing low. So this is what we can see here. And the take profit is at the swing high between the fair value gap and the current price. And also there's another condition here. This take profit distance has to be at least 1,000 points for US 500. So yeah, you can see then the trade is entered. We have the stop loss here, the TP here, and then we just wait for one of these levels to become hit by the price. And you can see like every one of these time intervals gives us a trading opportunity. But in this case, for example, the take profit distance was only 200 points, which is not enough. So we just do not take this trade. Here we have another trading example. So the TP should be more than 1,000 points, and it is. And this one looks like it will be a stop loss. Yeah, I think it hit the stop loss. And then we had some more trades that were not opened because the distance was not big enough for the TP. So you can see we do not trade every day. And in fact, most of the signals are not traded by the expert advisor because the TP distance is just not big enough. But yeah, that's the strategy, and I can fast forward this and we can see all the trades in the year 2023 are automatically executed by this program if there's a valid entry signal. We can also have a look at the graph, how this looks like for the year 2023. And yeah, we can see most of these trades, or on average, we can make a profit. Let's have a look at the inputs here. We are trading every single trade with 0.5% risk for this test. So you can see if we are losing, we will lose around 0.5% of the account. This is usually a bit less due to rounding issues and stuff. But yeah, you can see we are losing around 0.5% for every single trade. And then we're trading the 50 minutes time frame, and the minimum TP distance is what I explained, 1000 points. Also, the minimum fair value gap size has to be at least 10 points. I mean, this is optional. You can also trade fair value gaps that are really small, but I think it makes sense to have a minimum size for the fair value gaps. And then we just have the 3 time intervals from 3 to 4, from 10 to 11, and from 14 to 15. So this is how the backtest looked like in the current year, 2023, for the last 10 months when I'm recording this video. So now I think it would be really interesting to do a long-term backtest starting in 2015. So what I do now is I will start the same backtest in the US 500 using the US GMT time shift, and I will use the same program, same settings, starting from 2015 to 2023. So we will test, the last 8 years essentially. And I will turn off the visual mode because we don't really need it. By now, we know how the strategy looks like, and we will just have a look at the graph. And then in the end, I will have 1 or 2 more words to put everything into perspective. Okay, so here we can see that the test is now finished, and for the last years since 2015, this would have been profitable indeed. And this is tested, as you can see here, on 100% tick data using the Dukascopy data from the tick data suite. And we can see the profit factor is positive, which is always a good sign. So let me tell you 1 or 2 more things about this backtest, which are really important in my opinion. So you can see that when we have a look at these trades, we can see that in the beginning, there were not too many trades. Like in the first, you can see this is like somewhere here is where 2020 starts, somewhere here. So you can see the first 5 years made up only 20% of the trades. And this is because we are using this filter here where we have the minimum TP distance of 1000 points. And since the overall price of the S&P 500 was smaller or lower in the years 2015 to 2020, it was at around, 2000 maybe, and now you can see it is at 4000 something, which means that these 1000 points for the TP are relatively large in the first year starting from 2015. And this is why a lot of these trades were just filtered out by this 1000 points minimum TP filter. And this is why we see most of the trades only starting from 2020 on. And this is really, really important because the performance from 2020 on is better than it was starting from 2015 on. So for example, if I change this filter here and if we just use a minimum TP distance of 500 points now, this will change the whole picture here. So I can do the same test, the same period, the same data and everything. Now the only difference is that we do not use this 1000 TP points minimum filter, but instead we will lower it to 500, which will result into more trades taken like from 2015 on and in general. So let's have a look at how this plays out, and then we can have a quick final summary and then draw a conclusion. So there we are, test done, and you can see now we have some more trades overall. also some more trades since 2015. And yeah, it kind of changes the whole picture of this test using the ICT silver bullet strategy in the US 500. So you can see it is really, yeah, it really depends on the years that you test, on the settings and stuff. And I mean, I know that ICT, this guy, he says that you have to add some chart analysis and stuff and daily bias, and you have to figure out where the price would go next. But these are the things that are kind of hard to automate. So I just did a test with this strategy without any analysis upfront from the trader, and this is the outcome. So I hope that you like this little insight. And again, make sure to subscribe if you want to see how to build this strategy for the MetaTrader 5. This is it. Thanks for watching. Have a great time. Good trades. Bye-bye.